New numbers this week are expected to show the job situation is dropping fast, meaning that the millions of jobs the Fed is merrily butchering are not extra jobs lying around. Those are jobs people actually need. The other day I talked about how thousands of homeless encampments spreading across America are not actually counted as unemployed. Through the magic of government statistics, they are instead counted as, quote, out of the labor force. Statistically, they're retired. This is because government statistics, you'll be shocked to discover, minimize the number. They only count jobless people if they are actively looking for a job. That means if somebody is living permanently on government benefits or living in a tent strung out on fentanyl, they are not, as a rule, actively seeking a job. It turns out that is a lot of people, and it's rising fast. If we compare to the Trump-era trend, there are about 3.6 million missing American workers in the past 3 years alone. Where did they all go? Well, 2.5 million went on disability, which soared over the past 3 years, and the last million are simply not being counted. If we did count them, we'd be looking at an unemployment rate right now of about 6%, which is smack dab where we were at the start of the 2008 crisis. But the sugar-coated books are only half the story, because even with the bank crashes, we haven't even begun to feel what the Fed's economy-choking hikes will do to jobs. Now, it's well accepted that there's a big policy lag in rate hikes, meaning once you raise interest rates, it'll take something like 12 to 18 months for the effects to hit the economy. In fact, the Fed's epic round of rate hikes started in April of 2022, so it's exactly 12 months ago, but they didn't really start biting until about October, which is 6 months ago, meaning we have barely begun to feel the first light breezes of what could be, going by the credit crunch, one heck of a storm. And that's where the new jobs numbers come in, because they're saying that light breeze is already toppling buildings, starting with job openings. Now, a year ago, there were 12 million job openings in America, which is about 3.5 million above trend. That was back when nobody wanted to work, so McDonald's was offering 15 or 20 bucks an hour. Those days are now long gone. Tuesday's numbers are expected to show just 1 million above trend, so we've burned off 2/3 of the so-called surplus jobs before the rates even hit. Meanwhile, pain is coming from the other side of the anvil. According to one layoff tracker focused on tech, companies have, quote, slashed more than 170,000 jobs in the past 4 months. That's compared to 15,000 jobs cut in 2021. So we could be in for a whole lot more pain in jobs, suggesting that the Fed's current strategy of sacrificing jobs to hide the inflation it created is going to backfire. In fact, it could lead to stagflation, this time combined not with $20 McDonald's jobs, but with millions of jobless desperate to make ends meet. Okay, we'll be watching. See you next time.